Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
All right, so today we have Ariel Isakov with us. And Ariel, it's great to have you. This is going to be an interesting podcast because I've never heard of this particular business that you are in. So it would be great to give us a little history of how you first got into this business and what exactly it is. So great to have you.
Yeah, I appreciate that introduction, Bruce, and thank you for having me on the show here. We got started in this industry, the industry as a whole started back in 1911, back in, when that Supreme Court case passed and deemed that a life insurance policy was an asset, no different than the car you drive and the house that you live in.
Okay. So you basically, we lost you. Come back. There we are. All right.
Off button.
That's all right. So explain how this works exactly.
So a life settlement
policy, and you want to sell out or sell the policy to you, basically.
Yeah, so essentially we get approached by seniors all the time where they have a life insurance policy that they no longer need, or it's unaffordable by them, due to the cost of insurance going up. And more than ever, we're seeing this in the market now that life insurance is seriously a key backbone in individuals' lives because it serves as a backbone and a resting place for a lot of individuals as a sense of security and a sense of, they're able to actually obtain these life insurance policies and they're able to rely on them for their loved ones.
And so they basically have a life insurance policy. It could be a term policy, although they wouldn't get a lot of money for a term policy. But if they have a whole life policy, then they can come to you and sell it. And basically, let's say you have $1 million or $2 million policy, they can cash out and get some money from that policy.
Yeah, so essentially the market is spread very high because we accept anybody over 65 and with a minimum face value of 100 grand. And that's all it takes to actually go and see what you're qualified to sell your life insurance policy. And Abbastar is a licensed life settlement provider. We take pride in that license and take pride in our clients, as well as all the actions and everything that we do takes place here at Abbastar at the headquarters and as well as the other locations throughout the country.
Yeah, so you have 3 other locations other than the one you're in right now, which is in Queens, right?
Correct. So yeah. I'm at the headquarters here in Queens. We have another office here in Queens, and then we also have our office down in South Carolina in Charleston, and then Miami, Florida.
Yeah. So a person with a whole life policy can come to you and basically cash out. They no longer have to make payments on that life insurance policy, but they get money or an investment from you. Is that correct?
Right. So essentially, they'll get their payment and their cash offer from us, and we'll go ahead and we'll take ownership in that life insurance policies, making us responsible for the ongoing premium payments. And not only that, we also receive the benefit. Now, how we're working with a lot of individuals and a lot of real estate professionals is that in today's market, a lot of people are looking to diversify, whether it be diversifying real estate in different asset classes and asset types. This is an alternative investment that a lot of investors turn to have a sense of security and a sense of reliability in today's market is not something that you'll typically find.
Right. So you basically take that life policy, you start paying the premiums on it, and you pay the individual a certain amount of money depending on how long the projections are that they might live and so forth. And then do they actually get a cash on cash return for this, or how does that work exactly?
So essentially how the entire process works is an insured sells the life insurance policy to an investor. That investor will be able to take over the premium payments and thus the benefit of that life insurance policy. So when that time comes and that policy does mature, then the full benefit is paid out through the insurance to the beneficiary of that policy, which in this case is the investor.
Right. Okay. So then the investor basically does not get the premium of the life insurance policy when they pass away, but they get the investment that you've made all the way along.
Right. So it's a little bit similar, but what the investor gets is the death benefit after the fact that the policy matures. Now, in the plus side for the insured is that they receive the cash out offer. So essentially, it's a win-win situation, whether you look at it from the standpoint of the insured, where they would have got nothing for their life insurance policy. And when you turn to the investor side of things, that's where the investor gets a safe, secure, and a reputable investment that they're able to actually rely on them.
So do they get monthly payments? How does that work?
They make these premium payments, which are monthly, and the investment comes when that policy matures. So whether it be from 3 to 5 years, or anywhere from 5 to 7 years, the investor here can actually choose what type of policies they're actually looking to acquire, and what the term of that policy should approximately be. Because again, a life expectancy is no much more than an expectancy, and we don't typically rely on the expectancy in order to deem a case profitable or not for the investor.
So let's give a sort of a practical example here. Let's say somebody comes to you and they have a $2 million life insurance policy. They're gonna, and they have a life expectancy. Let's say the actuarial charts give them a life expectancy of say 10 to 15 years. What sort of money, just ballpark, might they potentially expect?
Right. So for 10 to 15 years out is typically too far for what we look at.
Okay.
Typically, the highest we'll go is 10 years, and the lowest, like I mentioned, will go with 3 years, just due to the fact that there's a difference in a viatical settlement and a life settlement. What we're dealing here with today is called a life settlement. That's where essentially anyone with a life expectancy over the number of 3 years, that's deemed a life settlement. And it's an alternative to these investors, because when you're purchasing a policy, and I'll always use this example of my friend John Doe. John Doe has a $1 million life insurance policy, and he no longer wants it. Now, John, when he was in his 20s and 30s, he was a doctor. He was a surgeon making a high income. Now, he bought this policy originally for his kids. They were his beneficiaries since day one, and his wife as well, just in case, the inevitable happens. And what he goes on, he's already 70, 80 years old, and he still realizes he's been paying almost triple, if not quadruple, his premium payments of what he's been paying the past couple of years. So he deems it that he no longer needs it. His kids are, thank God, they have families of their own, and they're successful and they're thriving. And there essentially is no longer a reason for him to receive that benefit from the insurance. Thus, he doesn't have to pay for the premium. He doesn't want to pay for the premiums anymore. So he comes over to us and he sells us that policy. Again, it depends case by case range, but typically we'll purchase a $1 million policy from anywhere from 250 to 300,000. So he just received that cash offer from us, and he was able to go ahead and enjoy the rest of his retirement with that. You could travel the world. We've had instances where people started their dream businesses. You wouldn't imagine that people that are in such high age and they're still looking to do these extraordinary things, which is great to hear. Now, the investor purchased that policy for around $300,000. They're obligated to pay those premiums of 20. Again, depending on the case, it's usually around anywhere from 10 to 20,000 a year.
Okay.
And the life expectancy, we'll throw it out there. Let's say it's 4 years, right?
Yeah.
So you're typically paying 300,000 plus that 4 years of premium payments. So let's tack on another 140, 150,000. You're all in less than $500,000. So when that policy matures, if it's most of the time, it could happen at that time. It could happen before, it could happen after. There's no guarantee that it will happen at what date. So what we're able to do is able to estimate how far out we can see how far the policy premiums will be able to take us into that margin. So we're able to receive the benefit right after that policy matures.
Okay. All right. So they cash out, they get $250,000, $300,000 out of their $1 million policy. They still have to pay the premium for another, what'd you say, 2 years or so, 3 years, 4 years?
Yeah, the investor takes those premium payments.
Yeah. Okay. Well, the investor meaning
pays those premium payments on behalf of that insured. Essentially the beneficiaries, they are obligated to pay those premiums.
Basically the doctor no longer pays those premiums.
John is no longer paying nothing.
Yeah, right. So the investor pays those for a period of time. So what happens at the end of the 4 years?
So when that policy does mature, could be 4 years, could be 3 years, could be 5 years.
Yeah.
So when that policy matures, the investor receives the full benefit from the life insurance company, from the carriers themselves, pay out the beneficiaries.
Right. Okay. So a lot of these whole life policies have cash value. So what happens with that?
So typically the cash value is either, it's taken into the consideration before the fact of underwriting. So underwriting actually takes in those factors as to how much the cash value is. And we've even seen multiple cases where clients have taken out loans on those policies. So all of that was factored into the underwriting process.
Okay. Well, that's very interesting. All right. Well, so, and then if you own commercial real estate, that doesn't really factor into this. You can't like take out one of these policies based on commercial real estate, right?
Correct. So typically we'll work with a lot of investors who are looking to diversify their portfolios. A lot of them are in real estate, a lot of them are not. It's a great way to diversify, great way to have stable returns, and something that, it doesn't matter what's going on around the world, whether it be, who's in charge politically or what's being thrown out there in the interest rates. This is something you can rely on. We can go back to COVID when it's been a popular time for where there was, financial turmoil. And what happens to the real estate market? What happened to the stock market? Those didn't perform too well. While you look at the life settlement market, it was simply unaffected. It was untouched by these types of circumstances. So you'll essentially have a sleep tight at night investment.
So it sounds like your target market really is somebody that's older that may die in 2 to 10 years or less, and they want to kind of cash out of their life insurance policy and get some upfront cash basically to kind of live the rest of their life. Is that sort of the perfect client to have?
Well, you're not hitting it all the way on the nail,
Okay.
because
All right.
right now we're having a surge and increase of cases of individuals who are just looking to simply cash out of their life insurance. They're just looking to enjoy the rest of their life. Now, while there is a demand to purchase these policies, there's more of a demand to invest into these policies. So right now we're focusing, and I'm here to introduce towards the investor side of things, where individuals are actually able to take part of this investment tool that not many people have known about.
Okay, so there's two different scenarios here. One is to cash out, basically, say the $1 million doctor example where he cashes out for 250 or 300 and gets the money right away. But the other alternative is to cash out basically and leave the investment with you. Is that correct?
No, so that second option is where the investor is able to come to us and essentially invest into a single or a portfolio of policies that we offer. Now, it's good to mention that it's the investment side.
So I see so there's the person selling the policy, but then on the flip side, there's people that are investing in the policies. I see what you're saying now. Okay.
Yes.
So you've got the two different sides.
Yes. So there's a consumer end of things and there's also an investor side of things. Now, for the investor side of things, we take things, just the next step further, where not only will we offer one policy in particular to take a look at, we can even offer portfolios of policies where you'll actually spread the risk throughout a different number of variables, where you'll essentially have maturities at a sooner time because of the fact that you'll have more policies in that portfolio. So again, there's two types of investors. There's the ones that like to purchase those one-off policies, or those investors who like to purchase a collective portfolio of policies. Now, we've had them structured in different ways. We've had individuals, single individuals purchase portfolios at large volumes, and then we've had groups share and fractionalize one particular policy. So it really depends on what type of investor is. But since Abbastar is a licensed life settlement provider, we're able to offer that flexibility with the investor and custom tailor to their needs.
Okay, now I'm getting a much clearer picture of what you're saying here. So on one side, they're selling the policy, but on the other side, there's the investing in the person that's selling the policy.
Correct.
Yeah. So okay, let's flip this over. Who's your target market or your best client for the investor side?
Right. So the greatest clients we've seen are the ones that are in actively commercial real estate. Why? Because they're used to that criteria and they know essentially they have that same investment appetite as what the life settlement as a product can produce.
Right. So it's a much in many ways it's a much more stable investment than say real
100%.
estate, which
This, like I mentioned, this asset class is untouched. A lot of market factors come into effect when you're talking about other investment offerings and investment products. This is just not one of them. This does not have, a risk factor that's based off of the external side of things that somebody can control.
okay, well, this is very fascinating. I'm very intrigued by this. So let the audience know where can they get a hold of you, Ariel, so that they either as an investor they can come to you, or if they happen to have a policy they want to sell, where would they contact you?
Yep. So they can always call us at our toll-free number at 877-222-4782. And then you
Say
can
that
reach
again
me.
a little slower.
That's 877-222-4782.
Okay.
The
All right.
best email to reach me at is Ariel, Ariel, at Abbastar.com. That's Abbastar. And the website to visit us if you'd like to invest is investabbastar.com. If you'd like to sell a policy, you can reach us at abbastarlife.com.
All right. Well, this is fascinating, a very interesting area that I was not at all familiar with, even though it's been around since 1911. So
Yes.
this is terrific. All right. Well, for the audience out there, get a hold of Ariel, either as an investor or a seller of a policy. So great to have you, Ariel. I look forward to talking to you again down the road.
Thank you, Bruce. And thank you all.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.